Hello everyone, as you probably already know if you're watching this, Berkshire Hathaway recently held their annual shareholder meeting just a few days ago, May 2nd I believe. And if you don't want to watch 4 hours worth of content, you're luckily going to be fine, since I already did it for you. Remember that if you're a value investor yourself, subscribe, like, comment, do whatever for the YouTube algorithm. Here is my quick summary of one of the most expected events for value investors today, Berkshire Hathaway's annual shareholder meeting 2020. Enjoy. Just a note here, the meeting was actually done online without Munger, so they're actually much more efficient. Additionally, the meeting, you could say, was split into 4 general parts in which I would be explaining. Warren's presentation, which was basically about investing in America, future outlook for America, not betting against America, selling airline stock, etc. Next, he went over Q1 results for Berkshire. Third, the formal meeting, and then lastly, the Q&A questions asked by Becky Quick that she got from the general public. So, first of all, he started with his presentation, which is about investing in the current situation in the coronavirus crisis. And Buffett is hopeful. He said that he thought the current events were just interruptions of growth, just interruptions, and that over the long term, America would recover, the world would recover, and that the economy will go back on track to growing, and that you have to have trust in the country like he did during the 20th century. Things like World War II, the Cold War, 9/11, 2009 crash, all of that, and America pushed through and worked its magic. He also brought up the age of the United States, which is just 231 years old. Compared to the ages of him and Charlie, there's really only a 46-year difference. And how it's amazing that all of this happened in just 3 lifetimes, really. From a population of 3.9 million, of which 0.6 million were slaves, to what we have now, the largest economy in the world, major superpower, in just 231 years. Then a lot of other examples came about, discussing the change in the wealth of the country, the Louisiana Purchase in 1803, the return they got from it, how much wealth did they generate, and then compared it to the current crisis, how there were around 16 million males in 1861, of which around 10 million were between ages 18 and 60, and that 6% of that group were killed during the Civil War, which is in 2020 around 4 million. He then compared our crisis to the Spanish flu in Omaha, how that was worse than the current situation that we have now, and basically just said, this is absolutely normal. You have faced worse before, and we have overcome them. You have to believe in the future that America will prevail. Then he went on more specifically about stocks. How from his birthday, the Dow Jones average was 381 points, then it declined 48% to 198 points, then went up again to 240 points, and how nobody was really expecting a recession at the time, but obviously it went down again to a mere 41 points. But people survived the crash, and even if it took 20 years to break even, it did indeed recover. Still, you wouldn't have lost money if you invested on Warren's birthday. So basically, his conclusion is never, ever bets against America. Next, he talked about how if you invested in bonds, the 30-year treasury for 1.5% at 2% inflation, you're practically losing money, so stocks seem to be a much better choice in the long term than lending money to the government, as long as you aren't speculating. The only problems that would occur if you invest in stocks is if you use leverage, or if you let your own head and thoughts get to you, which I must say is kind of hard to avoid. But just remember, buy the business, not the ticker symbol. Next is earnings. Berkshire's earnings. He said they're not really that important as there are too much uncertainty caused by the coronavirus, and he said the 50 billion loss was just an accounting loss as they have restrictions recently to account for unrealized loss or gain. So obviously that would be because of the recent crash. Then he talked about how 124 billion isn't really 40% of his portfolio, because if you actually calculate the value of all Berkshire's businesses, it's really only 20%, and that's the way that he sees his cash. So next he talked about airlines. So basically he said he closed all 4 major airline positions. I think that was United, American, Delta, and Southwest. He sold at a loss. He said that he was wrong about the business and that the airlines changed fundamentally, that they would take very long to repay and their debts and recover from the virus. He says he can't tell the future of the business, how many people will fly, the competition of airlines, so he just left the airline industry. Even someone like Buffett, it's interesting, makes mistakes. So next to the formal part, I'm just going to do a quick summary here. They discussed some proposals to the structure of Berkshire, some more diversification rules on boards, etc. That's not really important. So next we go to the Q&A. First on airlines. So he basically just repeated what he said, that the airlines will really be hurting. He also said that only big companies would be somewhere where he could put his money towards at a maximum of 10%, which is really interesting that he has a limit when investing. For him to invest in something, the market cap should be in the 30-40 billion area at least. Otherwise, he wouldn't make enough money for it to be worth it, which is an advantage investors like us have. I'll be making a video on that later as well. Next, there was a question on should we buy now? Why is Berkshire sitting on so much cash? And he said again, it's not a large cash position in case of emergencies. And in the case of buying or selling, it's really based upon whether you're buying the business or speculating. If you're buying the business, no matter what happens, no matter how much cash you have, it will work out in the long term. He said that he doesn't know anything about what will happen in the short term. Then he discussed money, how there really isn't a shortage of money, so it's a good time to borrow money due to the low interest rates at the moment. On the question of performance, how Berkshire underperformed the S&P 500 over the last 5, 10, even 15 years, his response was that size really does make it hard to get high returns and that there isn't a guarantee on future performance. But he also said that Berkshire has special treatment because of its size, such as private equity deals for preferred shares. No one can do what Berkshire does in energy, insurance. No one can transfer money to where it's most needed, cash allocation, etc. On oil, he said that it doesn't work at $20 a barrel. They have to cut production. Production will be down. There's a lot of oil in storage right now, and it will take some time to clear it all out. So we should expect lower prices in the short-term future. Because of that, there is a risk and permanent loss of capital from the oil companies to even the banks that are lending to the oil companies, and that bad debt in energy loans will cause equity to be wiped out. So that's his take on the risk of investing in oil right now. It's all based around oil price, but he doesn't know where it'll go in the future, long term. So in the breakup of Berkshire, he said that there is going to be high taxes during the process that eliminates his advantage of being able to move capital around, which is a really big thing. Things like that. Of course, he said that Wall Street doesn't get fees if nothing happens like Berkshire right now. On interest, he said that there is more money printing at negative or low interest rates and that he has to see it to believe that it will not affect inflation in the future. He doesn't see negative interest rates and more debt forever though. He says that it's really an interesting question, how we can have negative interest rates, which theoretically means money is easier to get, but at the same time, no inflation. He says he doesn't have the answer to this and that he's ready for everything, and that he's prepared. They also discussed pricing power of some of his businesses, like the railroads, for example, or the energy sector that he owns, that would actually do good in situations of high inflation because they're so based upon price. Another question was on the government always defaulting in situations of large amounts of debt. And he says that isn't really possible because the government literally owns the money printing press, so they can't really default, so the debt will just grow and grow. It's not really a concern to them because they're borrowing money in their own currency and they can just print more of it. Finally, there was a question about buybacks. And this is really interesting. To that, Buffett answered how it doesn't seem intelligent when you can grow the company that you would spend your cash on buying back shares. How you have to buy only below your business's intrinsic value, and that's why he said you have to value your own business. And he said that companies buying back shares with a certain amount of money in a certain time frame let's say like 30 billion in this year, for example, is really just a crazy idea, because you're buying at whatever price, no matter what price, no matter whether it's below intrinsic value or above intrinsic value. However, at the right price, buybacks, he said, can be helpful and can be useful to the company. Moreover, some companies use financial engineering or whatever to do buybacks to leverage the maximum out of their balance sheets. He basically said that was stupid and that he didn't know why anyone would do it, basically. Here he was pretty much just referring to Boeing at this point. So I hope you enjoy my summary of Berkshire Hathaway's 2020 annual shareholder meeting. Now, with all your saved time, you can watch some more of my videos. Be sure to check them out as well. Subscribe, like, comment, do whatever for the YouTube algorithm and to interact with my channel. Tell me if a video is good or bad. We'll see you in the next video. Thanks guys for watching the video if you made it so far, and if it gave you value and you want to support my channel, remember to subscribe, drop a like, and really just interact with my channel. It really helps a lot. I've really had fun making these videos as of late, and especially when I know it can reach some of you out there and really make a difference. That's really my passion for making these videos. So for now, that is the video. If you want to check out my other videos, my channel is mainly about financing and current events, and if that sounds interesting to you in any way, you can go check it out, and I'll see you guys hopefully in the next video. Thanks for watching.